Hello and welcome to the Gold, Goats, and Guns podcast again for July 31st, 2025. My name is Tom Luongo. We have a lot to talk about. This is episode 225. I just recorded 224 with Martin Armstrong a couple of hours ago. I have with me, as promised many times now this week, that I have Caitlin Long with me. Caitlin, how are you?
Hey, great to see you again. Wow, the world's changed since we were last on a few weeks ago. Kind of worked out the way we predicted, though.
And it's interesting the way things have moved in the last. And I want to remind everybody that Caitlin was last on in episode 213, which I have, of all the podcasts that I've done, that one has been referenced and I've gotten more positive feedback from, as people are like, no, you have to listen to this one. And I tell people all the time, yeah, you should, because it's rare that I feel like a guest on my own podcast, which was fun and lovely. And then there's rarely do I ever, get caught where I can't actually say anything. That's a rare thing as well. And as everybody well knows, this certainly my poor long-suffering wife knows. It was funny. She was asked when we were up in Calgary, we'll get started in a second. We were up in Calgary and we were meeting everybody at the Cornerstone Forum up in Calgary, and we got together with a bunch of patrons, and they all asked us, do you ever listen to or watch this podcast? She's like, oh God, no. I listen to that crap all the time. Like he's not any different at home than he is in front of the camera.
Oh, that's cute.
Oh, I'm like, yeah, guilty.
Yeah.
Guilty. So
love it.
But so we're in this weird moment, right? Where Trump has been going after Powell now for a couple of months over interest rates and a variety of other things. I don't know. I think this is one. I know that you and I have slightly different views on Powell, and you with good reason. So why don't we start where you think this is all coming from, and we'll hash it out.
Yeah, then I'll turn the table back to you because I think a lot of your listeners know why you've had a positive view on Powell. Sure. I think the Fed's a political entity, and this whole notion that it's independent has never been true, but it's especially not been true since really going back to the Obama years. And it got a lot worse under Biden and under overtly political Michael Barr and Powell, who's a never Trumper. So pretty clear that the interest rate decisions were driven by politics. And even the dissents that just happened yesterday, we picked today so that it was deliberately after the FOMC meeting, so we could see whether Trump fired Powell after the FOMC meeting, which I didn't think he would do, but I still think, he went after him again today, very hard. I don't think he lasts until May. I think the poly market assessment, which is, last I looked, with 18% probability that Powell's gone by the end of this calendar year, I think it's higher than that. Okay. Over to you. Let me ask you the same question. Why have you defended Powell?
Because I still think that that high interest rates are necessary in order to drive what Trump wants to get done, trade deal wise. Like he and Bessent ran a clear, obvious operation to lower the dollar.
Yes, now, and succeeded.
And succeeded brilliantly.
Yes.
Now, on top of that, you have Powell holding interest rates at 4.5%, because what's that going to do? It's only going to exacerbate the situation in the offshore dollar markets, because you're still draining liquidity out of the offshore system. So you wind up with the double whammy of, you're going to wind up with tariffs and a higher euro, yen, yuan, yada, yada, yada. And those two things together, to me, Powell holding rates high just supported Trump's whole policy, and actually could easily be argued helped create the situation where the EU had to roll over on Sunday.
And they did. And I was thinking of you when I saw that press conference with Ursula von der Leyen and John Williams, who very few people know, and what he did to pull control of US dollar interest rates away from London to New York when LIBOR was deprecated in favor of SOFR. You and I've talked about that you've talked about it at length, but in the episode that you referred to, we explored it in greater detail.
Right.
But the aha of that is the US is no longer a vassal state of Europe. And it was effectively that because Europe controlled, specifically London banks, controlled US dollar interest rates all the way up until March 31st of this year.
Mm-hmm. Yep, that is correct. And so those are the two competing narratives with Jerome Powell
Yep.
as FOMC chair. So the way I still view Powell, and I'm happy to see Powell leave the scene now, and I'm not going to. And there's a couple reasons why. Um, you have people are built to do a specific job. They have a mindset. They have an imprinting. I'm built to do a particular job. I'm not built. So I'm built to do this job. I'm not built to run big companies, right? I get I get told that like daily. So Powell is the guy from my perspective, going all the way back to everything I've ever heard about Powell from the time he was a junior member of the FOMC, that he was one of the hawks throughout all the Bernanke and Yellen years, screaming about, zero bound interest rates are wrong. QE, he never agreed with QE, certainly never agreed with yield curve control under Yellen. He was brought in by Wall Street to do the job that he was brought in to do, which was to get SOFR implemented and then drain the liquidity, the massive amount of post-COVID liquidity.
But he created that post-COVID liquidity.
Well, he didn't have any other options. He really didn't. The CARES Act passes, the Treasury goes bidless, and Powell doesn't have much of any options whatsoever.
If Janet Yellen
was not implemented at that point, Caitlin.
I agree, I understand, but when history looks back on this, it was nuts. We literally told all the producers in the economy to put their pencils down and stay home.
Yep.
And the U.S. debt exploded during that period of time. If the Fed had said, no, we're not doing that, then they wouldn't have been able to, the U.S. government wouldn't have been able to finance it. So no, absolutely, Powell was complicit in that. And he didn't really push back. Go back and look at what he said. He didn't really push back. Part of the problem is the Fed itself is a very left-wing organization. Go look at its political donations. And it's not just to moderate Democrats. One of the people recently confirmed to me a couple of things about what happened in our situation. Number one, that Michael Barr told Fed staff to go find something on us. Another is that I'm not sure who at the top was told, but Fed staff were told, keep Liz happy. Who was their master? It wasn't Jay Powell. It was Elizabeth Warren during this period of time.
Sure. And no argument about all of that.
Yeah.
I am not arguing any of that because we all know that. And when we go back and look at the reconfirmation, the history around Powell getting confirmed for a second term and how hard the Biden administration fought it, as I've said many times, the insider trading scandal at the Fed was created by Obama and Lael Brainerd to get rid of Powell and install Lael Brainerd. And what did they wind up getting? 3 of Powell's big lieutenants as hawks, Kaplan, Karida, and Rosengren. They were replaced with literal communists.
With MMTers. Yes.
Yeah, MMTers, communists all the way down the line.
Right,
Daniel DiMartino Booth has been screaming about this forever, that the future of the Fed is, post-Powell, is, so you can see it in multiple ways, right? Trump went along with the CARES Act.
Yeah.
He went along with all.
Trump is everybody. No hawk.
Right.
Trump is no hawk. Trump is no deficit hawk.
I know he's no hawk. I know he's no hawk. But we're in a situation during COVID that this was I still argue that this was an absolute operation from the ground up to destroy what was left of the United States.
Correct.
It was a coup.
I agree.
It was a coup. And I think it was a coup against both the Fed chair that they knew wanted to continue to keep rates above zero, and the sitting president who wanted to expose everything and start the process of changing everything out. And knowing that SOFR was on the horizon for Powell's second term, they had to get rid of him. So all the data and all the incentive structure points there. Whatever Powell could or could not stand up to is up to our conjecture and our personal, is more of a mirror of our personal biases than it is a lens through which to see anything. I'm going to be blunt about that. I see it this way. You see it another way. It's fine.
Yeah.
It makes and the listeners can decide what they agree with. The truth is probably somewhere in the middle, right? to be honest. So with that said, though, I think see Powell as the guy to change that old system out, get SOFR implemented,
He
deal with the
did.
problem, deal with
Yeah.
the problem that he as best he could. And at the moment when it was pretty obvious that, you know, at the very last, he didn't start tightening until the very last possible moment. He could have started tightening earlier than that. He could have started tightening before June of
Yeah,
2020.
he was late. He was
He was
late.
very late, and
Yeah.
you know he was. I'm not
To
saying the guy's
tighten.
perfect or anything. Like
Yeah.
you know, as Fed chairs go, like after Bernanke, Yellen, and Greenspan, like you
You know,
know,
the date that chart that has been bandied about in the last couple of days, that it's the first dual descent in the FOMC since 1993. And
right?
you go back and look at all the Fed votes and how often there were 3 and 4 dissents.
Right.
And I mean, basically, it's a bar chart with all those bars in the 50s, 60s, 70s, very common for Fed governors to
Right.
dissent. And
Mm-hmm.
then came the Greenspan era, and there were virtually no dissents.
Yes.
And so the graph is empty because it's got no bar charts. It's got no bars
Right.
on the bar chart.
Mm-hmm.
Periodically, there'd be one dissent here or there since the Greenspan era began. But that began the imperial Fed chair era.
Right.
And Peter Conti Brown's book on the Fed is phenomenal. And he asks the question, structurally, if you look at how the Supreme Court was created by the founding fathers and look at how the Fed was created, they each have 7 members of the board. Why is it that the Supreme Court justices are all independent, have their own staffs, make their own decisions, and the Fed, it's the opposite? The chair, it's the imperial chair, and
Right.
you don't see the Chief Justice of the Supreme Court forcing unanimity in the decisions the way that the Fed chair under Greenspan forward has done. Now, I actually think it doesn't matter who's the next Fed chair, that pendulum is swinging back hard. Because
Agreed.
remember, if you go look at who's on the board of governors, it's 4-3 Democrats appointees. And that's counting Powell as a Republican. Okay.
Right.
And he's not a Trump fan. So it's really 5-2. But the FOMC is who votes on interest rates. Go look at the FOMC. It's really easy with AI to go look and see, of course, most of the people who are regional Fed presidents are independent, right? You can't find a voter affiliation, but go look at their past contributions to politics, or go look at who they're married to, or go look at what they did before. Pretty easy to figure out. This is a clear majority Democratic board. And so that's part of the reason why I think Trump has not fired Powell, because it doesn't necessarily accomplish what he wants. Because the board's then going to split and go back to what it did before. Well, you'll have 3 or 4 dissents, and it's no longer a 7-0 vote. Or in the case of the FOMC, I think it was 11-2 or whatever the number actually was.
There were plenty of dissents. There were only X number of voting members at any one time, and the vote
Correct.
and who gets to vote, and that's all very political. And Daniel
very
Booth's
political.
and Daniel Booth's book on that in and of itself, and how the whole rotating system works, and it's insane, and it's all it's all unnecessary.
My gosh, yes, right,
okay.
Including the 20,000 employees, right? People are asking, and Trump trolling Powell by going and visiting the construction site was, first of all, meme worthy. And the memes that came out of that have been phenomenal. But it was just a giant troll, because it just shows, and I know a lot about this. Obviously, I've sued the Fed and have had discovery. I can't talk about it, but I know a lot about the inner workings of that organization. I actually probably know more because I've seen across the famous silos than internal people do, because they're stuck in those silos, right?
Right.
And most of them haven't had access to, their colleagues' emails to go look at all this stuff. Granted, it was one thin horizontal slice, but it was a horizontal slice that came out in discovery. And you could even look at what's public in our lawsuit. I'm not revealing anything here, to determine just how many people's emails we got and the insight that we had. But granted, it was specific to our application, so it didn't cover any of the monetary policy stuff to speak of. There were monetary affairs people who showed up in the publicly disclosed documents, because the way this thing works, it's and you could discern this from looking at the public documents. I mean, there were like 40 different people who commented on our draft denial letter. It went around and around and around and around. Right. I mean, we know from Discovery that they made Michael Barr made the decision to deny us right after FTX failed on November 11th, 2022. They didn't announce it until January 27th, 2023. So during that period of time, right, that's when the draft letter got passed around. So the whole question of the bureaucracy, when Powell talks about, you can't say it's 3.1 billion because it's the third building. Trump is coming back and saying, why do you need all these buildings? And then you go look at the fact that 40 different people were involved in the comments and ask what. It's not that they're not working hard. It's that there are 40 different people involved in doing one thing that in corporate America, maybe 3 or 4 people would have done.
Sure. No, there's no argument here that the goal is still get rid of the Federal Reserve and get rid of the whole central banking cartel and everything else. I've been from my perspective, nothing about what I've set my goals on have changed. It's the order of operations in which these things have to occur in order to transition from one system, the current system we have, to the next system.
Okay, let's talk about that. Yeah,
that's where I'm getting. That's where we're going to go here, because it's clear that the history of the last 5 years post COVID are a mess, right? And it was clear also that I don't think they were expecting to lose the 2024 election.
Clearly not.
Clearly not.
Same thing with 2016. Yeah.
So Powell being Powell and being very conservative on what he's going to do, especially after the inflation nonsense of 2021. I look at this and I go, yeah, we're still running interest rates. We're still running inflation top line above 2%. Employment's decent. He has no reason to cut from a legal perspective, from a quote unquote data perspective. So he's not going to until there's enough wins up on the board where he can finally start walking away.
Well, let's talk a little bit about that. Oh, sorry. Finish the thought, and then I want to come back to that.
So what I'm saying, so what I'm getting at now is that Trump likes to create narratives. We all know how we operate.
He's very good at it. Yeah.
So Powell is his scapegoat for everything that's wrong with the Federal Reserve. And it's not, you could argue that it was Powell's job to fix the Fed while he was Fed FOMC chair. But institutional inertia is insane, right? And you can see how hard it is for Trump, who's literally went in with a 4-year plan out of power to get anything done at all so far. Right. So the institutional inertia has been, off the charts.
Oh, yeah. Doge was supposed to be $2 trillion and now it's $144 billion and they're fighting over that. Yeah.
Right. And it's so here we are. So all that matters is that I think Powell was built to do what he did as a person, but he's not the guy to lead the Fed into the next phase of this.
So that's
what I think. And that's why I think that Powell has been cast in this role while Bessent and Trump start taking power away from the Fed. And what Trump has to do now is set the PR campaign to teach the normies, to
justify that. Yeah.
The problem with the country. Part of the problem that I'm having here is I have to deal with the Fed, and I got this guy over here. This is the very Trump way of dealing with it. Even though Powell's actually doing his job for within 1 sigma of reasonable. Is he a little high at this point? Maybe. Is he a little? Could he have cut 25 basis points yesterday? He could have. Honestly, I actually made the argument. I thought, you know what? If I'm Powell right now and the whole market is expecting me not to cut rates, I'd have cut rates.
Right. Yeah. Just to show who's boss.
Right. Just to show who's boss. If I have a real complaint with Powell in the last couple of years, it's that he holds the market's hand too much, telling him what he's going to do.
And he lets the market dictate it. Yeah.
If he had decided to come back and just go, you know what? Hey, bungle, we're cutting rates by 25 basis points. Yeah. That would have sent everybody into a tizzy.
But by the way, the market should dictate it, right? Coming back to Fed reform. But let's talk, before we come back to the reason you reached out to me, which was my tweets about tokenized Treasury bills. We'll come back to that in a minute, because that is a pathway for Bessent to roll the Fed. But
That's exactly where I know where we're
we're
going
going to
here.
go there. We're going to go there. But
Absolutely.
in the meantime, I've been thinking a lot about this whole notion that the Fed keeps saying, "Oh, the tariffs are creating all this uncertainty." What is different? Okay, anybody who studied economics understands what happened to Smoot-Hawley and how that that contributed to the depression, et cetera, et cetera, et cetera. What is different is, have you noticed that each one of these trade deals comes with a foreign direct investment commitment? That's very dollar positive.
Yes, it is.
So they're trying to smash the dollar, and they've succeeded. And except in the last couple weeks, the dollar started to rally again. They've taken they took the dollar down massively since right before the election. But now here comes all this foreign direct investment commitment. That's the difference. If the Fed were really honest, and they were really focused on what was actually going to happen with the economy, they would factor that in because it's very dollar positive. And it has had a lot. Every one of those trade deals came with a commitment for foreign direct investment. And that did not happen in the Smoot-Hawley tariff situation. That smashed economic growth and investment. And Trump has made sure, and I don't know whether it's Bessent, whether it's Trump himself, whether it's Lutnick, somebody has had this idea of these are not just little trade deals. This is not about tariffs. This is about smashing the non-tariff barriers. And this is about getting foreign direct investment commitments that come with these trade deals. Agreed. And no one's really talking about those other two things.
Actually, I have, and I have tried. I've actually been defending Trump on this point and saying at the same time, yeah, dude, everything you're doing is going to create domestic inflation because you're bringing all these dollars back on shore, and then you expect the Federal Reserve to cut rates by 400 basis points. Like, what do you want to do here? I mean, it's funny, that's been the weird thing. Like I said, you're doing all of these things, and then you're expecting your Fed chair to act against what you're doing. Like nothing. I don't agree. I don't disagree with what Trump's doing. Yes, let's get rid of the non-tariff barriers. Let's get rid of all of this regulatory crap. Let's, if we have to, we'll just claw back the excess profits. I made the point to my subscribers a couple of weeks ago. I said, look, think of it this way. Everybody went into this with this typical friggin' British free trade, globalist bullshit about tariff bad. Well, there's a reason for that, because tariffs bad because
tariffs have been bad in the past. Yeah.
Well, but it also makes central banks good. This is it's tariffs bad because we want central banks good. They're the opposite sides of the same coin, because who issues the money, who issues the liquidity. Now, but what you've done in this free trade environment where you can then manage, where everybody else can put tariffs on us and put up trade barriers and everything else, what has it done? Well, I said the other day was like, look, if you're Nike and you're making Air Jordans, you have every right as the innovator to command a 50% or 60% gross margin in the sneaker market. But if you're the Indian knockoff or the Chinese knockoff of an Air Jordan pulling in a 45% gross margin, when you're the knockoff, you should be pulling in 6%. Sorry, we're clawing that back. Fuck you. That's what this whole thing is about. Like all this team crap. It's like we were finding out that all this stuff on Amazon that you can buy for 20, last year you bought for $20. I got news for you. I'm still buying the same crap from China for $20 on Amazon, and we're getting paid for it. So they were getting paid massive, effectively rent.
Correct. Yes.
And so Trump just said,
and stealing our IP.
It's over. Yeah. And so, but from Powell's perspective, his goal, and I think his goal has been, I still argue that his goal has been to drain the offshore dollar system in order to give the Fed more control over its own monetary policy.
Correct.
Then until he feels comfortable that system has been brought under control. And we've got uncertainty with Trump's economic policy and his fiscal policy and all of this other stuff, that there's no good reason for him to cut interest rates until Trump has put up enough political wins on the board to get everything passed.
Yeah.
Like if I'm Powell, I'm sitting there telling Trump going, plan looks great. Prove it. Like, I'm going to be very Missouri about this. Show me. And you haven't, and look, at the June meeting, we were in the middle of a 12-day war with Israel and Iran.
We were, right. Exactly. Yeah.
Like,
yeah.
excuse me, I'm not
No one
cutting
knew
it.
where
If
that
I'm
was going to go.
Powell, I ain't cutting
Yeah.
interest rates into that
Yeah.
bullshit.
Yeah.
And then
Yeah.
we're here at the end of July, and I'm like, well, maybe he could have cut rates here. But again, he only just got the budget reconciliation bill under control. No one knows if it's going to. We all know it's going to be very good for the country, except for the people who are fucking globalist shitbags who are arguing otherwise.
Right. It's not good for Wall Street investment banks, and not good for the people who benefited over the last 20 years.
It's not good for, it's not good for the old system of
right.
the old forex system and everything else.
Yes.
Right. And so all of that, that dominates the financial press, because financial press is the worst fake news in the world. Right. Far worse than CNN. Like, I'm sorry, Bloomberg and the Financial Times are far worse than anything that.
Oh my gosh, the Financial Times has been just on fire with fake news recently.
I know. It's crazy. So when you factor all that together, I'm like, if I'm Powell, I'm like, politics or otherwise, like, dude, like, I'm not cutting interest rates until I absolutely have to. One of my patrons also pointed out the other day that Powell tends to like to announce big policy changes at Jackson Hole.
Well, so that's going to be an interesting thing, okay? Because there's, by the way, the Wyoming Blockchain Symposium is right before the Jackson Hole meeting. It starts August 18th, so 2.5 weeks from now. Guess who's speaking? Bowman and Waller. They didn't come last year, because last year it was, crypto bad, right? Now it's like, oh, okay, they're both on the short list to be potentially replacements, right? So, and they're both apparently coming. So this is going to be interesting, very interesting, because Scaramucci set up that event. He approached me about this a few years ago. Like, why don't we do an anti-Jackson Hole meeting right before, like a pro-crypto, kind of an anti-establishment meeting? And the funny thing is, like, the establishment's now coming to us. So, and the University of Wyoming, I chair the Wyoming Blockchain Stampede. That crowd through the Wyoming Blockchain Center at the College of Business is actually a co-sponsor and handles a lot of the staff work for that event. So that's part of the reason I know that this is all happening. So yes, so it's really interesting, because you're right that could be an interesting time. I don't think that, but coming back to the prediction that I don't think Trump's gonna keep Powell in that job until next May. He can't. Trump can't keep him there, just every day browbeating him about something or another. I think there's plenty of cause. As somebody who's done a lot of research into this, the Humphreys executor case. Can the president, like, who really controls the executive branch? Is it the elected president of the United States, or do we have a fourth branch of government that is immune from any democratic checks and balances? And unfortunately, for the last couple of decades, it's been the latter. But Trump is trying to get control over that. And the Fed, the Supreme Court even said in one of its cases that the Fed is special for historical. I forget the phrase that they used. That in the spirit of the first and second banks of the United States, that the Fed is different from other independent agencies. But this gets to whether he can fire without cause. It's clear he can fire for cause. And so the question about cause is, in the definition, it's malfeasance or dereliction of duty. I don't think you can make a dereliction of duty argument. Malfeasance, I can make a lot of really good arguments. And I can't remember if I shared this when we were last on. I don't think I did. I think I've learned it since then. That did you know the Federal Reserve gave a clearing account to one of the Mexican banks that Treasury sanctioned for financing the fentanyl trade? And that happened under Jay Powell. Okay, that kind of stuff it exists. Also, man, oh man, is there a lot of smoke, and I happen to know a lot about this, over killing solvent banks. Silvergate, Signature, right? The Fed shot banks and literally took the property. I'm saying this in the context of, like, the legal concept of a taking of property. And they did not have the right to do that. I'm gonna leave it there, but because I think there may still end up being litigation over the failures of Silvergate. And once the Fed leaned on Silvergate and told them they had to liquidate, The next day was when the Silicon Valley bank run started. Okay, so they were playing with fire, and I talked about this at the time, that was how fragile the system really is. Just by taking a relatively small bank in La Jolla, California, and telling it had to liquidate, started a systemic event. And the Fed did not know that it was playing with fire, but it started that event. It directed Silvergate to liquidate, and the next day Silicon Valley has a bank run. That's malfeasance. That's the kind of stuff that if he wanted to go after, and by the way, not just Powell, I think he could go after Barr as well, and I could keep going on Barr. If he wants to shift that FOMC and shift the board to majority Republican, that's the kind of stuff he has to do. Let me throw it back to you. Is that what he's going to do, or how do you think this ends?
I think that's all on the table. I really do. I'm at the point now, Kayla, and I've been saying this for a long time, and I don't know if you and I talked about it directly, but if you haven't seen it in my freaking Twitter feed, I think we're setting up for a return to a pre-1935 Fed.
Where you don't have this powerful board of governors.
We go back to you repeal the Banking Act of 1935, and you get the Fed out of regulating the Treasury market.
Yeah.
Back to basically being a lender of last resort in the commercial paper market. New role, slightly different version of the Fed is what I think is going to happen.
Interesting.
And I've been saying this for a long time, and I will continue. And this is something you and I talked about in episode 213, which is that it is domestically, they're there for the commercial paper market. The Treasury takes back over control of the Treasury market, and that's what the stable coins are all about. And issuance and all of that, and then the Fed is the enforcer of par in the international markets, because that and effectively becomes an Ex-Im bank for all that, right? And that's it.
Yeah.
And
but do we put federalism back in the Fed where we have the 12 different regional reserve banks setting their own discount rates?
I don't think
that's the way it used to be.
Yeah, I know, and I don't. And the thing is, I want that, but I think we actually have something better than that. Go back to my argument about SOFR. When I first put forth the ideas about SOFR, trying to wrap my brain around all of it, I had Daniel. I asked Martin Armstrong about this morning. I want to talk to you about it now. I had Daniel Booth on the podcast, and I was trying to get some confirmation that I wasn't crazy, basically. And she said, for all intents and purposes, she said, yeah, you're not crazy. So I went, cool. So I have a really weird thought. SOFR, with it being a market-driven rate, why do we need a Fed funds rate? Why can't regional banks just quote local capital based on their own? And we have a re-regionalization of the Fed funds rate via the market. And she sounds like a great idea. They'll never happen. They'll never give that power up.
Well, so here's what's interesting. There's virtually not a Fed funds market, right? It used to be that the banks all had Fed funds trading desks because they needed to make sure that all of their Fed funds were invested overnight. And there used to be a very active secondary market for Fed funds. After the 2008 financial crisis, that essentially disappeared. So the Fed funds market is not that important anymore. The rate itself isn't that important. It's really the Treasury, it's the SOFR, the secured overnight funding rate, and repo rates that have replaced Fed funds. So now, what you reached out to me about to catch up was the tweet that I sent out that I found out at an event that Treasury is very seriously considering issuing tokenized T-bills. Now, the impact of that, if you start thinking about that, is they're not actually securities issued in analog form using the traditional system. The impact of that is you don't need a central securities depository to become the custodian. Who's the CSD, the Central Securities Depository for the Treasury market? The Fed. So Treasury doesn't need the Fed anymore if they're not issuing them in traditional securities form using UCC Article 8 for the lawyers out there. They're going to issue it in tokenized form using UCC Article 12, and they can be their own custodian. You don't have to have a separate custodian. And here's the aha. You start having T-bills trading on these tokenized platforms, all of a sudden, FedWire is no longer the only large value payment system anymore. The Fed runs FedWire and ACH. Treasury can effectively make T-bills into a payment system of its own. Ding, 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 ding. They don't need a big Fed reform bill.
No.
The Treasury just goes right around the Fed.
We already have it. They're passing Congress. They're going through Congress and getting passed right now. And then we take it one step further and we realize that the banks are going to be able to issue their own tokenized dollars. And now we're back to the free bank. Now we're back into a nascent form of free banking that we had in this country previous to the Federal Reserve in the first place. And
so this is really interesting. Sorry, I'll finish your thought.
No, I'm just saying, to me, I'm like, all of a sudden, I was writing up this month's Ultimate Wealth Report for Newsmax, and I was going over all this stuff to explain to that audience, which is, I generally write at a lower, it's a lower resolution level. It's a different audience, right?
Yeah.
So for that audience, I need to go through this on this, kind of bill by bill, note by note. And as I was going through all of it, I'm like, I got to the end of it and I'm like, oh my, yeah, this is free banking, pre-Federal Reserve. Correct. This is
except
okay. So yeah, and I've been saying for weeks, I'm like, I'm kind of over Thomas Massie, and I've been quite vocal about this because Donald Trump, of all friggin' people, and Scott Bessent are going to do more to reform and end the Fed than all of us and all of these Ron Paul libertarians have been able to actually accomplish. Yeah. And this has been and this was literally what I said to the Mises Institute like 9 months ago. And I'm like, guys, here we are.
Yeah. Well, it's because of the technology that got created that Treasury can harness. And because the Fed didn't see the writing on the wall, kept its head in its very insulated, very groupthink, very, small, only people with PhDs will we listen to. They didn't see what was really going on, and they missed the forest through the trees. Mm-hmm. And now it's too late, right? Because stablecoins are a new payment system that exists outside of the banking system. Tokenized bank deposits are different. The banks are now looking at the non-banks getting the ability to have their own payment system and saying, we want in on that. And so the interesting question then is what happens to fractional reserve banking? And it does actually then come back to a very, very, very important question, which is who's going to provide credit for small businesses? Because it ain't Goldman Sachs and JP Morgan and Citi, okay? It's the small banks on the street corner, and they don't have access to the technology. Guess who's working with them? You can see from the press releases we've put out that we are actually bringing that technology to that market. The vast majority of payments are still originated through the community banks, but they roll up to the big banks. So JP Morgan and Wells Fargo originate more than half of ACH payments. You probably didn't know that.
No,
they dominate. They dominate ACH because they're clearing payments for all these small banks, and they're raping them. Wise, formerly TransferWise, put in a comment letter that did a big analysis a couple years ago on the markup that these big banks charge for clearing payments for little banks. They charge up to a 100x markup. Okay, so if somebody can push the cost of payments out to the street corner bank, okay, it takes some of the power away from these large banks. A lot of people are looking at this going, why do the community banks exist? I have the opposite question. Why do the GSIBs exist? We don't need them for foreign exchange anymore.
Right.
You don't, they're holding everybody hostage as too big to fail. The real creators of credit that we care about, for which the securities markets can't produce the same magnitude of credit, is the small community banks.
Exactly. No, I've been thinking about this from a global perspective of how do you break the City of London and their forex trade, right? And that's what I've been thinking about. And I keep
Tether
looking at
created it.
Tether, and it looks like Ripple, the Ripple network has been blessed for a variety of reasons. If you're happy to push back on me about that, I'm just reading what I see. So I'm not. I bring it up, and everybody's like, "You're shilling for Ripple again." I'm not shilling for anything, folks.
I don't mind that. I think it overstates how important that network is. Part of the problem is the banks have always been suspicious of it,
right?
Because it is a centralized network. And the tokenomics are backwards, right? Mm-hmm. So one of the step back in creating these tokenization platforms, the people who extracted money up front are never going to be trusted because everybody's going to look and think that anything that they do is an exit scam to try to dump on retail. Okay, the most effective tokenization platforms are the ones where there was no money up front or very little money up front, and that's Bitcoin and Ethereum. So it's really that simple. I don't think you're ever going to get the trust because of all that money that got raised up front. That was the first of the ICOs in their case. And that's, I mean, they've been at this longer than almost anybody else. And they haven't made a lot of progress. And now what did they try to do? Instead of trying to sell that into the banking industry, they're getting their own regulated financial institutions and trying to issue a stable coin. So that's kind of, in some ways, an admission that the base layer blockchain didn't get the adoption that they were looking for. Now, I will also say the Biden administration was a big part of that, right? By forcing it offshore and saying, you can't, basically, this is the SEC, Gary Gensler, trying to use that because it was the obvious case since it was the first ICO to say that was an illegal securities offering, right? And going after them. And that hamstrung them. It didn't hurt Ripple as much as the Fed hurt us, right? Everybody who was targeted by the Biden administration was hurt to varying degrees. So, but I'm acknowledging that for the XRP army that's going to come after me for saying something I think rational about it, that it's not going to take over. It's not. If it were going to take over, it would have taken over a long time ago. And now they've actually pivoted to issuing US dollar stablecoins on the network, which kind of tells you that they understand that the base layer network is not going to become the base layer of replacing SWIFT. And part of it is because of those tokenomics. But that said, I mean, I think part of the reason Ethereum is running, the price has run a lot, is because when the US Treasury decides which permissionless network it's going to tokenize T-bills on, and by the way, they've of course not announced this, I'm speculating based on something that I heard, this is coming. They're not going to use Ripple. They're going to use Ethereum. They may use Bitcoin, but the Bitcoin layer 2s are not mature enough for something like that, right? They've got to think like a bank. And the most mature blockchain platform by far for this type of issuance is Ethereum. Solana's coming up, but it's so centralized. I don't know that the U.S. government would want to take that risk. So I'm speculating here. The Bitcoiners are trying really hard to be able to push layer 2s. And I think there's some really interesting layer 2s in Bitcoin, but it's still a little early. So I don't know what the sequencing is. How long does Treasury wait before it does this? Does it wait and see, who's the new Fed chair and whether Bessent himself might be the new Fed chair? I'm sure he wants to do both jobs. That'd be amazing. It has happened before, as he's pointed out. And then whether they can work with the Fed or not.
I think that we're also looking at a situation where if Trump wants to go off the board with his Fed chair pick, and I don't mean Bessent at this point. Now let's talk about somebody that he's tried to get on the board and failed to do so because of people in the past, because of, we're coming up on the anniversary of John McCain's death.
Judy Shelton. Is that who you're talking about? Yeah. Mm-hmm.
So you get to that moment in time where you say, if he has to go off the board to put somebody in charge of the Fed who's completely outside of Fed culture, and he's got this Congress to get that through this fall, he's got to make that's a big rug, right? That's a big prayer rug. I don't care if it takes a flying carpet to quote Patton. Like that's a pretty big, ask. And so he's really got to make that case, and he had to start that case as early as possible. Like, you know what I mean? This had to be part of the plan, and that's why Powell has to be the bad guy in this psychodrama. The interesting thing is, I don't know if you saw this, and I've mentioned this in other places, so people are going to get tired of me talking about it. But did you watch the 1 hour convocation of central bankers at the ECB at the beginning of the month?
I did not. No.
Oh, I see. This is why it's hard for me to have such a, every time Powell is given the opportunity to be the bad guy that Trump wants him to be, he doesn't do it. So he's at the ECB for an hour with Christine Lagarde, that slovenly prick Andrew Bailey at the BOE. Ueda, I was so thoroughly unimpressed with him, kind of just slouching. I mean, I was just like, I'm just like above it all. And so Bailey, Lagarde, Ueda, and I can never remember his name, the guy from the Korean South Korea Central Bank, having a shindig over at Q&A hosted by the AP at the ECB.
Yep.
50 minutes worth of boilerplate central banker speak, and Lagarde literally running a struggle session with the crowd to try and puff up Jay Powell every time she tries to insinuate that he and Trump are at odds with each other. And Powell's like kind of rolling his eyes a little bit. And then we get to the last two questions that actually matter. And you can just skip to the last 10 minutes, folks, and watch this, which is he's asked about the reforming the supplemental leverage ratio, which you and I talked about in episode 213. His answer was, so do I support the thing that we at the FOMC overwhelmingly voted in favor of? Yes, I kind of do. And that was like, room went silent. Boom, fuck off. And then closed the fucking door, as it were. And then the final question was about stablecoins. Bailey went first and said, well, I don't even know if they, rise to the definition of money or not.
Okay, yes, I did see that part. Yeah.
Lagarde comes out and literally just says, I'm a communist. I believe money is a public good, and I'm going to regulate it like a public good, and I'm going to do everything in my power to stop this from happening. We're going to issue the digital euro. And then Powell's like, look, we were trying to work with the Biden administration to get rational crypto working, and then he said we're working with the Trump administration on the new stuff. So in effect, what he said was, I'm working with the Trump administration to get these things done. This is what President Trump wants. This is where things are going. I'm okay with it. Moving on. And everybody was like, shit.
Well, they knew the horse was around the barn.
I honestly think that Powell is as much like everybody else. He's like, I'm done with the job. I've done the job that I set out to do. It's time I'm going to exit the scene, but I'm not going to exit the scene in such a way that I'm going to set and then he said, and the only other thing he said that I found interesting at all, he said, look, my job is to leave the next Fed chair. I got 9 months left in this job, because this is what he said. I got 9 months left in this job. I intend to fill out my term and to leave the next incoming Fed chair with the best economy and the president of the best economy that I can, based on how we operate at the Federal Reserve. And the inference being, and if you don't like the way we do things at the Federal Reserve, you're free to change it. And I think that's fair. I don't even have a problem with that. I'll be honest with you. I think Powell understands that the Fed needs to be reformed.
Oh my God, yeah. But by the way, Congress is going to work on a Fed reform bill. So you were talking about, genius and clarity being part of it. No, there's an actual reform bill coming, because, Lummis, for example, understands that even though Trump said it yesterday, that Operation Choke Point 2.0 is over, right? You've seen J.D. Vance say that. Trump himself, I think, has said that. It's not true. She correctly points out that the mechanism by which it happened, where everybody was being debanked for political reasons, and a lot of the people who did it are still there. So she understands it's not over. And and by the way, they've been a little busy on Capitol Hill with legislating. They haven't gotten back to the investigations. They're coming, folks. And I know that there's just going to be some bad stuff uncovered, right? And you're starting to see the Inspector General of the FDIC came out and got ahead of it and started talking about some of the bad stuff that happened at the FDIC, right? So I think there's some major reform coming, and I don't know how the chips are going to land. I know the Fed wants to get rid of the FDIC. I know the FDIC doesn't think the Fed should be in the bank supervision job. The OCC wants to have all of the bank supervision, but then the state system would get rolled by the national regulators in DC, and they don't want that either. So how do all these chips fall? I don't know. But there is absolutely a understanding. It's so funny. I've mentioned this before, that multiple different groups between Capitol Hill, both House and Senate, and then the Trump group there are these lists circulating of who needs to be fired. And basically, who are the bad actors who did all this? And I've been asked, give me the names. And I mean, in our case, it's out there in public discovery. It's not hard to find. Right. So, so we'll see. So, but that debanking thing was a huge issue, and it's still there, even though Trump is taking a victory lap saying it's over. It's not. And they're going to address it. Tim Scott understands that they have to. Because if they don't, and all they've done is just try to reverse these things by executive order, the next time a Warrenite administration gets into power, they're just going to do it all over again. It's going to be Operation Choke Point 3.0 and 4.0, right? Yes. Yeah, and Obama did number 1, Biden did number 2. So the whole idea is make it such that banking is not politicized. But now let's come back to the fact that Tether's on the inside, right? You saw Paolo Arduino, the CEO of Tether, sitting in the front row of the signing ceremony of the Genius Act at the White House. And Trump calls him out and asks him to come on up and shake his hand. Okay. What is that telling you? That's telling you that all the folks who are concerned about Tether pushing the US dollar into dark corners of the world are not in power right now, that they're more focused on getting new buyers for T-bills than they are on surveilling all of our financial transactions. That's what that's telling you.
Which is welcome news. And it tells you, like, and this is, again, gets down to this it's wholly consistent. Let me put it this way. It's wholly consistent with what I'm seeing from Trump on the European political front. The way he's dealing with the UK, the way he's dealing with Europe, and it's consistent now with the trade deals that were announced, and the way they're going after the European Union, and the way he keeps struggle sessioning poor Keir Starmer. It's hard for me to even have any sympathy for Starmer because he's such a terrible person. But this is now the 3rd or 4th time that Trump is just literally treated him like the retarded kid at the at the Olympics or whatever. I mean, it's just really, really bad, and he deserves it. And he really does. I think that Trump is putting serious political pressure on behind the scenes. One of the things. No, I mean, I'm not talking. I mean, it's obvious. I don't know if you've noticed it, but I have. Which is that since Tulsi Gabbard went to London a couple of weeks ago, the entire financial press in Europe has started to change, especially coming out of City of London. Like the Times of London, how have they changed? I've noticed, like when Starmer and Trump were talking, were they were doing the after thing press conference, and I think it was either the Times, it was one of the big 3 London newspapers. So the woman asked, and it was a woman, which normally you would expect, okay, British woman going to go after Trump, going to say something really dumb, which Trump is going to have to then, swat
ridicule away. Right?
Yeah. No, she turns to Keir Starmer and asks, so how do you feel about how easy it's been for President Trump to get all these deportations done and get and change the political culture in the US when you're struggling with it here? Like, when's the last time a London newspaper would do that? When, as opposed to what the meltdown that they had when Trump went to meet with the Queen 5 years ago, seven
That's
years
really
ago.
interesting. Okay, I missed that.
No, I'm seeing all sorts of weird stuff. There's neutral Trump, anti-Zelensky stuff now.
That's starting to come out. Oh yeah.
It started in London 2.5 weeks ago. About a week.
Yes.
About 4 or 5 days before Tulsi Gabbard came out and said, "We have all the goods on Obama, and we're going to drip it all out."
Right.
Slowly but surely. I'm gonna release some documents, then I'm gonna go do some interviews, and I'm gonna release some more documents, and then I'm gonna wait for John Brennan to open his mouth and perjure himself again. And then we're gonna it's happening, and it's all targeted. And
oh wow. I missed all
that. I think every bit of why von der Leyen rolled over the way she did was because he's got her dead to rights personally on, I don't know, Pfizer, the biolabs, all of that stuff. Ukraine, all of it. I think it's all there. And he's like, yeah, and we're done. We're not doing this anymore. We're not playing by your rules anymore. We don't work for you anymore. And it's going to be messy and it's going to be ugly. And yes, the Federal Reserve as an institution is the last, real vanguard of that globalist system here in the
in
US.
the United States. Correct.
In the United States, they control it. It has to be dealt with.
But
and if Powell has to fall on his sword,
but Bowman
America
doesn't come from that.
Sacrifice the Fed, then I think he's willing to do it.
Yeah, so that's interesting. But Bowman doesn't come from that, right? But the problem is that and I don't know Waller as well, but they're the two dissenters. They're the ones whose names are on the list of prospective from inside to be promoted to Fed chair. And then, of course, there are the outsiders as well. But they don't think that way. And by the way, if you go do some research, you can figure out that they're not respected by the Fed staff, which tells you that they're actually over the target.
Exactly.
Right?
Exactly. Yes.
So,
that's exactly the kind of thing that yes. That's an excellent point. Excellent point. It's the way this is the way we're supposed to interpret all of this stuff, that when you see when you're taking flack, you're over the target.
Correct.
You and I live that life every day in the public sphere, right?
Yeah.
And if it's happening at the institutional level at the Federal Reserve, then it's just it's just as bad. No, it's clearly an organization that needs to be depreciated, and this gets me back into something else that I think is very interesting, and we've been talking about, which is that there's the theme of I'm going to sound like a little bit of a broken record, but this is important that everybody that I talk to realizes where my head is, which is a rapidly depreciating assets.
Mm-hmm. Yes.
Right?
Yes.
The Fed itself is the ultimate rapidly depreciating asset.
I agree.
In light of everything that we've talked about, SWIFT was clearly what I've come to realize is that SWIFT was a rapidly depreciating asset when Obama first used it to bludgeon the Swiss back in 2010. I think they already began to realize that the world that we're coming towards today was coming, and they were used
Bush
SWIFT.
Started that though. Post 9/11, it wasn't even Obama.
Oh yeah, that's true.
Because he forced the end of Swiss banking secrecy. Mm-hmm. And part of the reason I know that is I was working in Zurich then, and I had a legit bank account in Switzerland at the bank where I was working, Credit Suisse, at the headquarters. And then after I left that job and came back to New York, they made me close it. And I said, guys, I work here. What are you doing? Well, you're an American. And they made me close the foreign bank account. They were not. This was the first of the debanking, right? And but that started under Bush. Now after that was when Obama figured out you could use the sanctions and weaponize the U.S. system. But part of it is because he watched what the Swiss did when Bush forced them to give up banking secrecy just to stay part of the international financial system. And I'm not sure that was the right decision for Switzerland, because I was living it back then. Why are you giving up your vaunted banking secrecy? This is what Switzerland was known for. And we were looking at, this was back when I was working for the co-CEOs of Credit Suisse. And back in 2001, the stock went from 90 to 19, and it almost went bust. It almost went bust 2 more times before it finally went bust.
Right.
In the subsequent 20 years. But in any event, that we were looking at what would happen if it actually did go bust. And we recognized that it was mostly a US dollar company, and it was going to be the Fed's problem, because the Swiss National Bank was not going to print enough Swiss francs to bail it out. It was going to rely on the Fed to bail it out. So
which is what happened in the end anyway, when Credit Suisse went bust.
And ultimately when Credit Suisse went bust,
and it was ultimately in 2023. Yeah.
Correct. But it just, we understood that was how big the Swiss banking system was relative to the Swiss economy. And the reason it got that way, it was, 40 times the Swiss economy, which is so if you think about it from a central banking perspective, how could you possibly defend the Swiss franc when your banks are 40 times the economy?
Right.
You can't. You'll collapse your currency if you try, which is really all we're saying, is that this was going to be the Fed's problem if either one of those 2 big Swiss banks ever failed. Right. Same thing now, because there's only one. 3 of them have consolidated into one in Switzerland, because they keep failing because they're so leveraged. But I digress. The backdrop is, why did they get so big? Because of Swiss banking secrecy. And then the US forced it after 9/11 to give that up. But it was that as a signal that caused Obama then to say, well, let's start weaponizing the financial system. And then ever since then, it's picked up steam.
Mm-hmm. Yeah, no, it makes sense. And Jim Sinclair, I remember him like screaming about it when when Obama went after UBS in 2010. He said, "You never go nuclear." That's when I learned that lesson. You never go nuclear, because if they call your bluff, well, you got nowhere to go. And
that is so interesting.
didn't, right? The Swiss didn't, because as you just pointed out, they were in no position to do so.
Correct.
Because it was actually our problem.
It was our problem. Yeah.
So it really wasn't going nuclear, but it was in the end, it maybe, in hindsight, it maybe wasn't that, but it was certainly a lesson that everybody could use as an object lesson to then apply it to when you saw it in the future. When we went after Iran, we used the same thing in December of 2012 or 2011, blah, 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 blah. And then it was used against the Russians.
Well, because Switzerland was still banking the sanctioned countries, right?
Right.
And so, because of banking secrecy, they had this history. And the U.S. was trying to pressure the Swiss banks not to bank the sanctioned countries. Right. And ultimately, the decision that the Swiss made, and Switzerland is famous for its participatory democracy. This never got put to a vote. Yeah. So that tells you that the Swiss banks were really in control, and that the people in Switzerland were not in control, because this decision got made by the bank regulator itself at that time to try to basically keep the Swiss banks alive and going and continue to keep them leveraged. But and there's another history for the financial historians here. There's another piece of history. After the 2008 financial crisis, the Fed made all the foreign banks, the GSIBs, global systemically important banks, set up U.S. holding companies so that the Fed could get its claws into all those foreign banks. So this gets back to what we were talking about earlier about the LIBOR scandal. The LIBOR scandal broke in 2008, right? Because it turns out that the financial stress of these European banks was boomeranging back onshore in the U.S. because the interest rate got set by fixed income traders in London, not implemented by the U.S. And so part of the strategy was, let's get control of these foreign banks, because the Eurodollar market was so big. Yes, and that's exactly. And it was bigger. It ultimately grew to bigger than the onshore market, and the Fed doesn't have control of it. So that was the means by which they were trying to get some control of it. But then this is where it becomes a political hot potato also, because in the 2008 financial crisis, the vast majority of money that got printed did not go to U.S. banks. No. It went to foreign banks because of the stresses in the offshore market. And I'm not sure, Tom, if that happened again today, whether the pitchforks would be out if the Fed tried to do the same thing.
I'll be honest with you, Caitlin. This is why I think that this is why I think Powell is continuing to hold rates at 4.5%, is because since the end of synthetic LIBOR on March 31st, and then the Liberation Day tariffs happened on April 2nd.
April 2nd,
and we get the tariff tantrum. Story after story after story from European lowlights and highlights all said the same thing. We were worried that the Fed would be selective in the use of swap lines in order to bail us out. And that's telling you that Powell's basically told them, you're not getting any money.
Yeah. But this comes back to the whole tokenization of treasuries and Tether playing into the future, because Tether is partnered with Cantor Fitzgerald, which is one of the 24 primary dealers of US Treasuries. Okay, so all the money that what Tether's doing, and a lot of people are confused because they've heard all the bad stories, and there's probably, there's some history there. Okay, but they've done a lot to clean it up. I don't know how 100% it is, but it probably wouldn't meet U.S. standards if it were judged against those standards right now. But the money's there. It's funny. So somebody just today said, Tether hasn't been subjected to an audit. Well, because they weren't able to get auditors to audit them. But that doesn't mean that they weren't subjected to the only audit that really mattered, which is whether a US primary dealer was willing to do business with them.
Right.
And they were, okay? So that was
Right.
far more important than having, at KPMG or, EY
Right.
giving them an audit opinion, because a primary dealer was willing to put its reputation on the line and did. Okay, so now let's come back to when the next financial crisis happens. Here's what's interesting about what Tether's doing. This is the aha that I was alluding to earlier.
Sure.
What's the benefit of having Tether? People are like, oh, it's all these scammers, and yes, there's some history there. But Tether now has 500 million active users. They're pushing the US dollar to the people who make less than $1 a day and don't even have access to electricity. And they've built infrastructure. They have these kiosks in Africa where people can bring their cell phones and exchange their batteries and deposit their wages in Tether, and then go back to their village that doesn't have electricity. That whole group has never had access to traditional financial services at all. And so they're not interest rate sensitive. And here's the real aha. They're not going to dump their T-bills in the next financial crisis. It's going to be price insensitive, and it's going to be durable demand for US Treasuries. So why, for the banks to squawk and scream about this is actually keeping the US financial system going. Now, somebody asked a question today, is this really good? I never made the value judgment, is this good or bad? It just is. It is keeping the US dollar going. It is keeping the critics would say the Ponzi should collapse today. Well, there's no question it's keeping that going longer. Mm-hmm. So I'm not out there saying that this is a good thing. It just is.
Right.
And the US Treasury is embracing it. And so if JP Morgan or Citi could bring 500 million daily active users into their fold, then the Treasury would have put its warm embrace around them too. But that's not happening because they were living within that WEF globalist. We have to surveil every transaction. The compliance costs are so high that we can't afford to bank somebody who earns less than $1 a day in a village that doesn't even have access to electricity. But who can? Tether, and they did.
Yeah, no, it's a really it's an incredibly important point that when you make something too expensive to do, then what are governments good at? They're good at two things: killing people and creating black markets. And Tether is, for all intents and purposes, a black market in US dollars.
I mean, it started that way, right?
Yeah, no,
but it's much more important now than UBS.
But no, of course, and it's now because it created such a good hot sink for US Treasuries certainly for keeping the T-bill market liquid. Why wouldn't you embrace it? Like we
it's
should
obvious they should, and they did.
Issue T-bills.
Yeah, exactly. And while the banks are screaming, I don't think people realize how big of an earthquake just hit. The bank lobbyists lost on something. Mm-hmm. Tell me when the last time that happened was, Tom.
I don't know.
I don't know either.
And in some ways, like I think everybody is all of them are losing. And so now we're getting down to the very important point, which is that you are now democratizing. You're actually decentralizing US dollar issuance in a
massively
way that we've never, ever thought possible.
Yep.
Without a return to, 100% reserve banking and all, kind of a Rothbardian, which was never going to happen, which we knew was never going to happen. So
it just did.
It kind of just did, but the backing isn't 100% gold with no leverage.
Fair enough. It's 100% T-bills and US dollars, but it's 100%. But
we do have a reserve. We do have there's still could potentially be leverage within the system, but that leverage is now market driven, not Fed mandate driven. Meaning, Fed can say, "Yep, the reserve ratio is 5% or 7% or 3% or whatever." All that stuff goes out the window. Now the market gets to decide how liquid Tether or any of the other stablecoin issuers are, and they can compete with each other for. I've
had so many fascinating conversations with TradFi people over who look at that and say, oh my gosh, Tether's so risky, or USDC is so risky. And I lay it out. They've got all these T-bills. They've got all this cash, especially the onshore regulated ones. And they're like, but it's not FDIC insured. And it doesn't have access to the discount window. And you go look at the balance sheet. It's 100% cash. Plus there's some capital to back it. So it's really 103 or 104% cash.
Yeah.
And then compare that with the bank deposit.
Well, actually, I was doing some numbers the other day. I actually asked Rock, and I've done this before. They made 13 something billion dollars last year in profit.
Tether.
Ask yourself the question, Tether. Ask yourself the question, how many companies in the world made more than $13 billion in profit last year?
Yeah.
And the number is not very high. It's certainly less than
No, it's incredibly impressive as a profit per employee.
And this is the same argument that we were making for relisting and privatizing Fannie Mae and Freddie Mac.
Yeah.
Even as dysfunctional as they currently are, together they made $27 billion last year.
Yeah.
That makes them the ninth most profitable company or pair of companies in the world. They would immediately enter the S&P 50.
Right.
If they were relisted and added and then fully privatized, and the government were to sell off its warrants, which the government is going to do. That's a different story. That gets into all of, and there's a through line between these two stories.
Of course, there is, because it's all
and Tether,
the Treasury market.
And how we're going to support the current valuations within the housing market in order to then take that foreign direct investment that's coming in to produce new jobs and new factories and new everything else, along with the return of community banking. That's your model for growing your way out of this.
Absolutely.
Fiscal nightmare.
There's a really terrific. Sorry, go ahead.
Sorry. And again, I'm glad you see what I've been seeing, because somebody else fucking sees it.
Yeah.
Like other than maybe you, me, and Vince Lanchi sees it as well.
Yeah. Luke Groman also saw it. You kind of have three choices. You're either going to inflate away, you're going to try to grow your way out, or you're going to default. Okay. And it's very obvious which one Trump is choosing. He's trying to grow his way out, and he's making a prediction that the economy is going to run really hot there. And that he's critical of Powell because Powell didn't understand this and should have let it run hot, because had he let it run hot, instead of raising rates as high as he did, that we would have inflated away the debt, and our debt to GDP wouldn't be as high as it is right now. And over a couple of years of financial repression, which, let's face it, that's what it is, we would have actually reloaded the balance sheet and so he's critical of Powell for that reason. Really interesting, his most recent podcast. But this is exactly back to your point. This is what Trump is trying to do: grow his way out of it. He's got to have credit coming out of the places where real credit gets created. It's either the securities market or the community banks. It's not really the big guys. But coming back to comparing a stablecoin backed by 103% cash, or 105. In our case, it was 108% cash in our first few years, right? Wow. And the Fed said that was risky. But on the other side, I know. Now they understand.
You guys can't see it because it's an audio only podcast, but I literally just did I literally just did the Picard face palm.
You did. You face palmed. Yeah, that was funny because we were watching each other on Zoom. But but on the flip side, the other alternative, and this is what really smart TradFi people were saying: I'd rather have a bank deposit in a traditional bank that's backed by 8 cents in cash, and then another, say, 6%, 6 cents in capital. So there's 14 cents of loss absorbing capacity, and then 86 cents of loans and securities that may or may not be liquid. Probably aren't, and are likely to take a haircut in the event there's ever a bank run, right? But on top of that, you've got FHLB borrowing, and you've got FDIC insurance, and you've got discount window. Which package is, from a credit risk perspective, better? Would you rather have 105% cash backing your $1 liability, or 14 cents in loss absorbing capacity plus all these other, backstops? And I look at that and say, it's pretty clear to me, but I will tell you, in TradFi, they're all thinking, no, we'd rather have FDIC insurance and discount window. and 8 cents of cash backing your demand deposits.
And they're going to lose.
Well, if that's how they're thinking, they are going to lose. But here's the crazy thing. I don't know how this market's going to go. I don't think anybody knows. I just gave an interview with American Banker today. What's going to happen? I don't know. Anybody who's predicting isn't going to be accurate because nobody knows. Nobody knows right now. I mean, Citi is saying they're out there with a forecast that stablecoins could be 3.7 trillion, and they're just about 200 billion right now, for context, outstanding. They'll be 3.7 trillion by 2030. And I looked at it and went, that's way too low, because the banks which currently originate all the payment volume are not even in the arena yet. And Fedwire processes 1.1 quadrillion. ACH processes something like 87 trillion. Swift processes 400 trillion. These are not precise numbers, but that gives you a sense of like how massive payment volumes are. Okay. Yep. All that right now runs through the Fed one way or another. And here comes Tether. Yeah. Okay. It's like 175 billion right now. The total stablecoin market is around 200 billion. Citi's like, oh, it's gonna, more than 10x between now and 2030. I look at it and go, if this thing takes hold, which I am 99% sure it will, it's going to be massively higher than 3.7 trillion, because it's going to be like an Uber moment versus the taxi and limousine commissions, where the only thing that keeps the old yellow cabs on the streets is regulation. Trying to basically join them as opposed to trying to compete, because if they try to compete, they won't. These old payment systems and the whole notion that you're going to, the banks get to earn 1 or 2 days of float because it takes so long to settle a payment. That game is over. And the people who understand that it's over are the corporates. But the real question is, I don't know at this point, are they going to go with tokenized bank deposits, or are they going to go with stable coins? And if they go with tokenized bank deposits and the market, all that 1.1 quadrillion of Fedwire and 87 trillion of ACH ends up getting issued in tokenized form. Now, the question then becomes is, how on top of the bank run risk is the Fed going to be? Because the Silicon Valley bank run happened in the span of 48 hours. Back then, the Fed was making banks go through, contingency planning exercises called tabletop exercises, assuming that the bank run would take 2 weeks. Okay, so they were planned for a 2-week bank run. It actually happened in 48 hours. You start tokenizing demand liabilities, the bank could be done in an hour. Okay, so are you really going to allow, from the bank regulator's perspective, I ask this rhetorically, are you really going to allow a traditional bank to take in $1 of tokenized deposits and make a 30-year mortgage loan with it? Is that just a recipe for the next bank runs that are going to happen a lot faster? How are these bank regulators going to deal with that? And what's interesting is the president's working group report yesterday punted on all this. And I think they did it because Trump just got his people confirmed at the 2 of the 3 bank regulators, hasn't even nominated a 3rd one yet, and he didn't want to jam them, is how I read the situation. But you can kind of see the setup here is ripe for massive change.
Yes.
And I think because the horses are out of the barn, there's nothing to stop it.
Yeah, no, I can see that as well. And it's going to be the interesting part of this is going to be, the inertia of people and how I literally was having this conversation with my daughter last night, to be honest with you. I was trying to get her up to speed on some of this stuff, because she's, by the way, like classically hyper cynical Zoomer. She's 19. Okay. So she fucking hates crypto.
I was going to say
in every way because of all the potential for fraud and theft and and everything else. And I'm like,
it's
and
scary.
I said, and it is scary to her. And I said, but you don't understand is that what I'm describing here isn't something you're even going to interface with.
Exactly. We're going to abstract all that complexity.
What's going to happen is the banks are going to have the banks are going to be either issuing stable coins on these these payment layers based on your deposits, or
correct.
They're going to be taking Tether, or they're going to just be taking Tether in.
And you know what's much bigger? What's much bigger than crypto fraud? Check fraud.
I know.
Do you know how easy it is to write an e-check? All you need is the routing number and account number. The moment you write a paper check to somebody, that random person has access to all they need in order to write an e-check on your account. That's why there's so much fraud in the financial system. And, obviously there's a lot in credit cards as well, but that check fraud thing is a big deal. If we can get behind those gateways, where we actually convert that e-check into a stablecoin payment,
Right.
now all of a sudden it's traceable. Now you're massively going to cut the fraud, right?
Right.
But your daughter, who might be originating an e-check payment to pay her taxes, that's what I just had to do recently to pay my property taxes. You either pay the 3% fee on your credit card, which of course you're not going to do on a property tax payment, or you do an e-check. And the e-check, all you need is the routing number and the account number. Unfortunately, it is really easy. They need to deal with this fraud problem, no question, because the system was built for analog things and everything being slow. But my point is, we have the solution for it. You just convert that into a stable coin, and then it's traceable. You're going to massively cut fraud. By the way, that's going to solve a big problem for the banks. Right there. And so instead of stablecoin being this great new payment system that is better, faster, cheaper, and more traceable than ACH, you go in and say, oh, we'll cut your fraud for you.
Right. We'll cut your fraud for you by, well, how much? All of it?
We don't know. Well,
I
mean, obviously, you're still going to get some, right? Unfortunately, there are criminals in the world, and this is frankly why all these regulatory regimes exist. So yes, we will, as Martin Armstrong likes to say, human nature never changes. There are criminals in the world, and so we do need laws. But in any event, it's interesting that your daughter's not a crypto fan, but I agree with where you're going, which is that she won't know she's using it because it's all going to get extracted away in the background. Yeah.
Right. I'm talking about that. What I'm talking about is, I had explained it to her. This is middleware. This is not how you're not going to have to sit there with some crypto
backend
with some crypto wallet on your phone necessarily. I looked at her and I said, look, you have a bank account. You have the app for the bank on your phone. I'm not going to tell you what bank she uses, but I got news for you. Do you think that little local community credit union has a really robust fraud protection service? That they contract that out to somebody else and blah,
they do.
Blah, blah. And like the reality is, you don't even understand how the system is architected in the first place.
Correct.
You just have this idea in your head that this is safe because it's the older system, and the newer system, which has been subject to the Wild West for a long time, is an issue. Like at the end of the day, what you have to realize is that the world is going to move to this because the middleware layer, the payment layer, is going to be much more secure.
Much more secure. We're going to cut so much fraud,
and you're never going to interface with it in the way that you think where you're like, And she's, but I get why. She grew up during the last. She was a teenager during the last. Round of fraud in crypto and degen crypto, right? NFTs and this, that, and everything else. And that's what she and her friends have been chatting amongst themselves about. And they don't know any better because they're 14 years old. Like they're not banking experts.
Right.
Like, and neither should they be.
Right. But what's interesting? Paradigm put out a survey. For the first time in US history, a majority of people are getting other types of financial instruments before they get a bank account. Usually when you get your first job as a teenager, that's when you open up a bank account. That's what I did. I think I was 13 for my paper route. As you start earning money, you open a bank account, right? But now people are getting crypto accounts before they open a bank account. If they ever bother to open a bank account, and if they ever bother to set foot into a bank branch. Because our world is going digital so fast.
It is.
So I mean, I hope that you sit her down and teach her a little bit about how to manage a wallet so she can control her own financial destiny and not have some random unelected, economics PhD
destroy your life, right? And this is part of a longer and larger conversation that I'm having with her as she moves into every day. Every day she's moving into adulthood. My wife and I were like, so I mean, my daughter has a series of, she's slightly autistic, so she's got a lot of I think it's mostly childhood PTSD, to be honest with you. But what I mean is that she's, she doesn't like to go into the store. She doesn't like to do these. She's got all these kind of classic, in many ways, kind of classic Zoomer issues. And so she's learning. Like the other day, yesterday, our well blew up and we're getting a new well, having to get a new well drilled next week. And
oh, wow.
Well, it was time. I knew it was coming. No, like
Okay.
actually. So what was interesting is my wife had to text her, and I was like, "You have to stop at the store on the way home and get ice." Okay, seriously, you have to get ice because we don't have any. Because I got drinking water, but I forgot to get ice. She's like, "How do I do that?" I'm like, I actually before she even texted, I said, "You're gonna go ask my daughter, wife, go ask the daughter, text her and say, go buy some ice." And I'm like, and she's going to ask you, how do I buy ice? Because she's never bought
That's
ice
cute.
before,
Yeah.
right? I
Yeah.
mean, you know how to buy a candy bar. You go to the store, right? But ice, when you walk into the 7-Eleven, you know what to do. I'm like,
Yeah.
so, and of course, she did ask that question, but on the way home, she stopped and she did it. And she doesn't like to do it, but she did it like every day, a little bit. Like, so that was yesterday. Today is going to be
Adulting is hard.
adulting is hard, and but she also is, because we're getting very close to absconding off to Tennessee. So I'm actually kind of happy that the well blew up now, so that we could project
Oh,
manage
right.
that, get taken care of, so
Yeah.
that because she's going to take over the house
Ah.
down here, so she's going to have to be a homeowner. So Joy's a
Oh,
homeowner. She loves
wow. Oh, yeah.
so you can feel she's already getting it through her head. Yeah, I have to step up and start doing the things that I didn't have to do before because mom and dad always did it, and now she's actually embracing those ideas. So it's
Great.
like everything else, slowly but surely. Her
Great.
crazy dad explains to her the weirdness of how the world actually works. You have a front row seat to the changes because I'm going to rant about it every night if you want to listen to it. If not, go up into your room and go play Baldur's Gate. We're good. But
Yeah.
it's really fascinating to watch this play out as the father of a 19-year-old, knowing what I know, right? You can imagine what those conversations
right,
are like.
because she's not going to have the benefit of Social Security. All the things,
Yeah, no. And
I think you and I
so
are about the same age. Where the boomers.
I'm 57.
Yeah,
I'm 57.
I'm 56. The
Yeah.
boomers, just they were locusts, right? And it was interesting. Luke Roman's podcast talked about how there are so few tradespeople, plumbers, electricians, right? We need even more of those, right? We overeducated with college and underinvested in trade schools. And his friend was talking about how he's booked out 18 months already. And Luke said, why don't you just raise your price 40% for the boomers? And they'll pay. And you know what? He did, and it worked.
I know. I got stories of one of my patrons and who's now a friend of mine who's he's up in Tennessee as well, and I'm getting him actually. He's an electrician. I'm getting him actually do the electrical work because I want to spread the love. He's a friend. He and I play World of Warcraft together, and we were talking about it. He's like, his business is finally taking off. He's finally, because he had just moved out there a couple of years ago. So he's like building the contracting business out. And he was said to me the other day, he's like, that guy can pay an extra. I'm going to quote him some crazy number. He'll pay it. And it's happening. And he's like, that's hilarious. I'm like,
well, his point, and Luke. Oh, sorry. Go ahead.
Yeah, I was just going to say it. So I can see it in other areas as well, even if it's not boomers. It's just in general. It's just certainly in that market. Like,
well, he was making the point about boomers specifically because the boomers have all the assets right now. Okay, but they also ran up the debt, right? Yes. So what is debt? Debt is allowing you to consume more today by reducing your consumption in the future. Okay, the boomers figured out how to borrow from a group of people that had no say in the matter, which was kids not even born yet. Yep. Okay, and then ran up all this debt during their lifetimes. Okay, so they've got all these retirement assets. They're bringing them down now. And Luke's point is the younger generations, the Zoomers who can't afford to own a house, right? I mean, especially for somebody who's a tradesperson. Run up the price on the boomers. They're the ones with the money, and they're the ones that don't have the time.
Right.
and they're going to pay. There's a lot of truth to that.
And it's actually a really good point on Luke's part, and which is that you're actually doing the wealth transfer back.
Correct.
You're taking the money back that you stole from us, right?
Yeah.
And that's a way of looking at it. And the other story that came out, I saw another one today, which is that as I said about government, how the boomers and the old and the tail end of the silent generation who refused to pass political power to their children, who they always hated. Mm-hmm. Us, you and me.
We're the Gen Xers,
Right, we're the Gen Xers. We're like, they don't want to give us the power because they know we're going to tear down all the shit because we know what they did.
We know what they did. Yes.
Right, and so they're trying to they're trying to transfer and skip a generation and hand it directly to the millennials. their grandchildren who, they're thinking that they'll take care of them,
They can pull the wool over their
and
heads.
they're doing the same. But what's happened in government, you're seeing in promotions within corporates, that the boomers are passing down to the millennials and skipping Gen X again. They won't give Gen X the power. They
That's
will not,
interesting.
because they know in their heart of hearts that, well, they hate their children. They always hated their children anyway. My parents were silent generation. My parents were,
Mine too.
I'm a weird person. Not, actually, both Dexter White and I are similar this way. We have a different experience, even though we're like quintessentially Gen X in our ethos. We have a different experience of how we dealt with our home life, or we actually had responsible parents. I have boomer sisters. Who I don't get along with. What a shock. Okay. Just to give you an idea, the family dynamic there, right?
Yeah.
So no, this is, if that's another conversation for a different day. That's why I don't speak to my family. But that dynamic is playing out at so many levels within our society. And it's a real problem that we're going to have to get through over the course of the next couple of years. And it's part of the reason why, as the Zoomers become part of the voting age population, and we start to see the massive shift to the right that's occurring within them, massive shift to the right, that they're looking to their Gen X, quote unquote, grandparents. In my case, I had my own grandchild because I'm 57, my daughter's 19. Like, let's not kid ourselves. I didn't have a kid until I was 38. I should have had my kid when I was, 28, right? But the that alignment is starting to come together and fight against the millennial boomer dynamic, and it's a very interesting thing that's occurring right now. And
a lot of it is the housing market. Trump is right to put his finger on the pulse of that. That's part of the reason why especially Zoomer young men were heavily in favor of Trump, because they look at this and say, how am I ever going to be able to afford a house? How am I ever going to be able to replicate my parents, much less my grandparents' quality of life? So there's a lot of resentment. And part of the reason I love being back home in Wyoming and out of New York and DC is and even frankly, to some extent, the more local cities like a Denver. Part of the reason is that I really sense, because I live every day, the people who got screwed by the last 40 years, really since the early, actually 50 years, really since the early 70s, with all the inflation and all this money that ended up going to Washington, D.C. Go look at the real estate market in New York and D.C. and you'll realize something's really wrong. Something's really off, right? There was just giant sucking sound of value that got sucked out of the heartland into New York and DC. And maybe this is a good place to end. The person who warned about this was a rancher from a tiny town in Newcastle, Wyoming, debating the original Federal Reserve Act. He was Wyoming's first congressman. His name was Frank Mondell. And he warned, back then it was more agrarian, he warned that money and credit that the power over money and credit would concentrate in Washington, D.C. and New York if the Federal Reserve got created. And that is exactly what happened. And part of the offset to that was that the intention was to create some federalism in the Fed. Why are there 12 regional Federal Reserve banks? Right. Because they wanted to have at least some federalism. They did not want to recreate the Bank of England to one of our Twitter exchanges. They did not want an all-powerful centralized central bank in the United States. They wanted to try to at least have some check and balance on the power over credit and have it concentrate in the big cities. And Frank Mondell warned, as he was voting against it, and said, you guys are trying not to make this the Bank of England. You are trying not to centralize all the power over money and credit in New York and DC, and you're going to fail. It's going to centralize anyway, and that's what happened.
No, you're right, and I agree, and I've always agreed with that basic criticism, that basic Austro-libertarian criticism. It's what drove me to become the person I am today, to be honest. What I've noticed and what I've begun to realize in the last year or two, and I don't know that you and I have spoken about this directly, but I look to the Banking Act of 1935, which created the modern Fed, as the thing that created the durable it created a durable arbitrage for the cost of capital within the United States that allowed Washington to pick and choose winners.
Correct.
And they chose to give California the capital to build out the military industrial complex, Silicon Valley, the set and everything else, and leave the rest of the heartland behind. For the newsletter about 7 or 8 months ago, I did an analysis, and I said, so let's look at the rise of let's look at the change in number of electoral votes of California and Mississippi as a function of the Banking Act of 1935, which created it's clear in 1900 Mississippi and California both had 9 electoral votes.
Wow.
They both had the same number and percentage of electoral votes.
Yeah.
By 2020, California had 54 and Mississippi had 6.
Wow.
Now, even at its height, New York never claimed more than 8 to 8.5% of the electoral votes. And today, California continues to hold on to 10%, down a little bit, and they should have lost 3 or 4 seats if the 2020 census had been
honest. Yeah,
had been honest. So it lays right out, and it's the same. And the argument is simply that California and Mississippi paying 4% for capital disadvantages Mississippi and subsidizes California.
Correct.
No different. But I came onto this idea analyzing the euro and Europe when I said the monolithic, the central exchange rate of advantage Germany, because the Deutschmark would have been 2.
Yes.
And the lira would have been 70 cents, and there's internal mercantilism within the country.
Correct.
That rolled all the capital up into Germany.
100%. But that wasn't even advantaging the average German. It was advantaging the equity owners in the manufacturers of the German companies.
Bingo.
That's what it was. Right.
And then created the political monstrosity today we know as the European Union.
Correct. Right. But the average German got their pocket picked. The average Greek and Spaniard and Italian got a wealth transferred. Yes. Right. Yeah. Well, but the businesses in those countries got screwed. The businesses in Germany won. The consumers in those countries won, but the consumers in Germany lost. That's the creation. But if ultimately what you're describing, if we didn't have a single market in the United States and we didn't have a single discount rate set by the Fed, we would actually have a great deal of difference in interest rates right now. So will what's Bessent going to end up doing? He's a financial historian, clearly a brilliant guy. Interesting question is, what is he going to convince Trump to do? With the Fed? Everyone's focusing on the short term, but I think what you and I are looking at is what happens with the post-Powell Fed, right? Is a big Fed reform bill coming, or is Bessent just going to go around them and start setting interest rates on his own? I mean, ultimately, that's what's in the U.S. Constitution. The Fed is not in the U.S. Constitution. There are a lot of people who don't think the Fed is even constitutional.
I would argue that the Fed is not constitutional at all. I want a repeal of the coup against the United States of 1913.
Yeah, well, that was the income tax and the Fed.
And direct election of senators.
Which
is the most important one of the three. Which is the most important of the three.
Yeah.
Without a doubt. It destroyed the federal structure of it destroyed the true separation of powers in the United States. I will go to my grave on that one. Dexter White and I will I'll make sure we do 9 podcasts beating people over the head with this one. This has to be understood that the senators are supposed to be there to represent the states, and the state legislatures should have the ability to recall their corrupt and evil friggin' senators. And people like Lindsey Graham would not be able to run around the world acting like they own our foreign policy for another country.
Right.
No.
Right. Good point. Not. Good point. Yeah. And how corrupt that all is. I mean, the magnitude of corruption. I've alluded to this before.
Yeah.
You know a lot about our story, but you don't know all of it, because a lot of it I haven't been able to talk about. I mean, I'm sitting on some bombshells about the magnitude of the corruption in the system. And it's like, I was reading one of Martin Armstrong's pieces where he said he didn't regret what they did to him. He was wrongfully prosecuted, and he went all the way up to the Supreme Court, for people who are not familiar with his case, because they never charged him. And I think they sat for like 18 years in jail and he was never charged. And he finally got to the Supreme Court. And the Supreme Court said at that point, no, you have to actually charge. So you can't incarcerate somebody who hasn't actually been charged. I'm sure I'm not getting this quite right, but directionally I'm getting it right. And he, anyway, so the guy was in jail, wrongfully incarcerated. Took him that long to get out of jail. And they realized, he alleges, they never had the money or they never had the goods on him. One of my good friend's brother-in-laws was his lawyer and is absolutely convinced that he was not guilty of any crimes. And of course, Armstrong maintains that as well. For what it's worth, the U.S. government never actually charged him with a crime. So what he ended up doing is settling to get out, and I think he pled to a misdemeanor or something, and he got out. Anyway, long story short, if anybody should be angry that their life was disrupted, okay, it should be him. But he said he's not angry because what he learned opened his eyes to how the system really worked, how corrupt it really was, what the power structure in the United States really was, and it made him a better analyst for it. And I look at our situation and the things that I've learned. It's not over yet. And maybe, he kind of said, look, maybe my job was to go tell these stories. Right. And that resonated with me when he was telling his story. I mean, the end is not written for us yet. Obviously, in his case, he was able to get back out and, start his business back up again. For us, we don't know what the end game is going to be, but we'll see. I very much look forward to being able to tell the real story. And it's not going to shock any of your listeners, because your listeners by nature are critics of the system, and they're going to understand that it gets abused against good actors, and that's exactly what happened to us.
No, and having gotten to meet Marty personally and hang out with him up in Calgary a couple months ago, and then been able to on a couple of podcasts, I can tell you I haven't, and it is interesting to see just how serene he is about it all, to be honest with you, because I know that I'm not built that way. I'm built to hold grudges in ways that are so I look at it and I went, wow, more power
Godspeed.
to you.
Exactly.
Godspeed, dude. Like it is, it's great. So it's interesting. So
all right. Wow.
These are the stories that if we continue to tell them this way, that we set the zeitgeist up for the change that needs to happen. That's our role in all of this.
Yes.
And we do our very best, and we don't always get everything right, but you get what you can right, and you do it honestly, and you hope that tomorrow you're given an opportunity to do it again the next day. That's all we can ask. That's all we can hope for.
Yeah. Well, salute to your hive mind patrons who help you, see a lot of these things. I do give you credit, rightfully so, and you've given your patron credit for opening your eyes about SOFR. That's the biggest story nobody's talking about, that the U.S. got control of its financial destiny back.
And then everything else is a chess game after that. Everything else is just move, counter move.
Yes. And so when you understand that, you understand why Europe was going to have to cave. And so maybe last thing to end on is which country goes into a depression first, the UK or Germany?
Germany, because I think Trump is trying to save the UK.
Interesting.
That'll be a different podcast for a different day. But I'm going to probably talk to Alex Craner about that tomorrow. I think that Trump is trying to save the Commonwealth from the old colonial banking assets, families of Europe. That's City of London plus Luxembourg, Frankfurt, Zurich, all of that. And one of the things that Ian Burlingame said to me the first time I met him, he said, "Have you noticed that you rail about the British Empire? Did England participate in that? No, they got destroyed too."
Interesting.
So Little England has gotten destroyed.
Yeah, they certainly have. Yeah,
right.
Yeah.
And I've always used the example that why was Stanley Kubrick able to make Full Metal Jacket in England? Because it hadn't been rebuilt after World War II.
Okay.
So he was able to import palm trees and recreate Way City in the north of England. When I watched Clarkson's Farm, and I watched the struggle of the small farmers and how Jeremy Clarkson started out as doing Top Gear with sheep, and then turned it into a reformation, an entire recitation on how they're destroying farmers, and watching his conversion as a person into, it's powerful shit, and it's powerful in a way that is necessary. And I think Trump's a royalist in a weird way, and I think he's coming for the entire Commonwealth, Canada. He just sent Kash Patel to New Zealand, by the way.
Oh, interesting. Okay. Yeah. Well, and by the way, another piece on the chessboard is all of a sudden France starts it, then the UK, then Canada to recognize Palestine. I don't want to get into that topic, but just the coincidence, it's not a coincidence that they all did it within one day of each other. Yeah.
No, it's not.
Yeah.
It's not. Yeah.
All right. We got a bad storm
leave it there,
coming,
and we'll go on. So
I'm going to hop in and try to save my save my garden here.
All right. Caitlin, thank you so much for everything.
To you. Yeah.
As always.
And we will do this again when we have other big events to come in and analyze from a non-traditional perspective. Always learn a lot from you. Really appreciate this.
I appreciate absolutely. So she's Caitlin Long. I'm Tom Luongo. You guys know the drill. Be well. Keep your stick on the ice.